Welcome to the daily update where I'll go over the action in the market for Monday, June 9th, and we'll see how things look for Tuesday, June 10th. Kind of a sleepy day. The market is improving. We're still not trending, so we're looking at this sideways chop, but there's some optimism about the trade talks going on between China and the U.S., even though nothing all that big was announced on Monday, but they're going to continue their talks on Tuesday. Of course, you got all the riots and everything happening in LA, but that really doesn't impact the stock market unless it gets really, really, really crazy. And so the market is showing signs of improving. Now, small caps had a pretty good day, but they have a good day here and there and then just kind of fizzle out. Is this time any different? They had a pretty good week last week. So we'll see if we get any more follow through with that. Before diving into today's video, if you find it helpful, consider a 30-day free trial to the SPX investing program. This trial lets you explore my unique approach to market analysis. Full-length daily and weekly videos are available on a delayed basis after the market closes. For immediate access, become a member by clicking on the link below. All right, so right at the open, we had a flay open. There we go. It should be a flat open. With prices finding support at the daily pivot, $59.99. That's 6,000, pretty much. That's where we closed on Friday. And a little bit below that was the unchanged level. So we didn't go below that. So we were able to hold out. Then we were able to see prices climb up to R1 at 6,019. Then prices pretty much stayed right there at R1. But then we saw some late day selling. And that's usually a concern, but it didn't show a lot of conviction, but we saw a trailing off in Friday's session. We saw a trailing off again in Monday's session. So we just want to keep an eye on that. It gave back pretty much all the gains, yet we still closed positive. So we were up 0.09% on below average volume. That seems to be average now, is below average. All right, and we're still positive in the short, intermediate, and long term because we're above the 20, 50, and 200 period moving averages. Interest rates did come back down. That actually helped with the 10-year yield. It closed at 4.51% after Friday. It dropped under the 4.5% level. So that helped things there a little bit. We'll be getting some major inflation data this week with CPI, PPI. So the market might be a little apprehensive ahead of that as well. And then, as I talked about with the trade talks, there's some optimism there. The futures are up as I record this, but it's about 8 or 9 hours before the market even is ready to open. Okay, so some comments. There was guarded optimism. All right, that's better than unguarded pessimism, I guess, surrounding the trade talks between the U.S. and China, but there were no meaningful updates, and the talks will continue. Then China, they're having some problems with their economy there. Their CPI and PPI came out, and it didn't really bode well for economic growth in China. And they came out with their trade balance report that showed that exports to the U.S. have dropped more than a third. So, yeah, it's a country that has really developed on selling things to the U.S. Well, that's 1/3 less than it was before. So that's going to have an impact on their economy as well. Small caps did have a pretty good day. Again, we'll look at the chart later on. We'll see if anything interesting is happening there. We're still below 20 with the VIX. We're at 17.16. It's elevated compared to what we had been seeing over the last few years, but under 20. That's kind of the big thing. Now we have a new addition on the short-term list. So we're seeing a little bit of an improvement with the short-term momentum, the StochRSI. Now, the Williams percent R has been on the list for a few days, as has the CCI 14 and 20. The stochastics have been there, and we're still far away from the 20-period moving average, as measured by the boom indicator. And then our momentum oscillators are still not really kicking into gear yet. They're extreme with the PMO especially, and some of the other momentum oscillators that I'll show here in a moment. They're giving extreme readings, but they've flatlined pretty much. We're still looking okay with the bullish percent index, both for the S&P and the NASDAQ 100, and we're also far away from the 50-period moving average. All right, then no change to the overall scenario as it applies to the Fed. It's pretty much status quo there. The dollar was down, interest rates were down. We were at 4.48% with the 10-year yield, where we had been above 4.5% after Friday. That coming down did add some positivity for stocks. Sentiment is still positive. We ticked down a notch there. We had been at 63 after Friday. Now we're at 62 after Monday. We're still not trending. And I'll show the short and intermediate term chart there. We're below the moving average, but we're still looking positive on a bias basis because the green line's above the red line. And with even the slight update, our daily bias is positive. I'm still keeping our momentum at mixed. You could probably switch that a little bit over to more positive as well. All right, so we just had wholesale inventories. Now, there was another report after this, but I don't have charts to show you, and it's not an official economic report. But wholesale inventories were up 0.2%. They expected them to be unchanged. Last time they were up 0.4%. Not a really big change there. Then the other report, it's a survey of consumer expectations. It's put out by the New York Fed. It showed a drop in year-ahead inflation expectations. It had been at 3.6% for inflation. It's come down to 3.2. The 3-year outlook is also decreased to 3% from 3.2%. The 5-year also dropped from 2.7 down to 2.6. So a little bit more optimism as far as the inflation outlook according to the New York Fed. Here are the charts of the wholesale inventories, which are actually declining here. Now, you would think in light of all the tariffs that this would be really going up. They're making products that can't be sold. Wholesale inventories just say, okay, it just sits there and it's not going out the door necessarily, but this is actually declining. All right, then looking at this, welcome to a new bull market, more reasons for the bulls to smile. All right, it just talks about when we go down 20%, what happens after that? And if you look at all the statistics and the further out you go, typically the better the percentage of times that we're up will improve, and also the return will continue to improve. Then consolidated equity positioning, starting to see folks coming back in here after there was an awful lot of selling. We're not up to the zero line yet, but we are coming back up with folks that are getting more into stocks, according to that chart. A lot of buybacks. This is positive for the market too. So this is just on a year-over-year basis, it's hitting new highs here. And this, when a company comes in and buys back its own stock, that's taken as positive. And then earnings sentiment is improving. I showed this chart, I believe, for Monday's video. I get it in one place one day, and then Isabel Net blog charts ends up posting that same chart the next day. So sometimes there's a few repeats here. But both with emerging markets, developed markets, as well as global, we are seeing the sentiment, how people are feeling about earnings is improving, and that's positive. And then the next resistance for the S&P, according to this Bloomberg chart, would be the all-time high set back on February 19th, 2025. We didn't really gain much ground in Monday's session, getting closer to that, but we're not necessarily falling away further from that either right now. And valuations seem to be getting a lot of these charts lately, where the one that I focus on is the S&P 500. We're getting up into the 22 range, forward looking now. When we get above 20, that's considered to be overvalued or expensive. Where you have the NASDAQ 100 at 27, this measurement of the small caps has it at 24. Again, as I always point out here, the small cap index that I look at and talk about over the weekend, it has us down around 14, 15, 16. So there's a real discrepancy. But we've been seeing that consistently here, where the equal weight for the S&P is at 17, a little bit above that fair value level, and mid caps are just a notch above the 15 level as well. And then annual realized bottom-up consensus earnings per share, still looking pretty good when you look at the small caps going out into the future. Of course, that's off into 2026. And we are looking fairly positive across the board. May not be as robust as it was in the past, but it is improving. And then this going up, this just means that cyclicals that tend to cycle with the economy, when this is going up, that means those stocks are having some confidence about the economy doing okay looking forward. If they were not confident about that, this ratio would be going down like we saw kind of the beginning of 2025 into the lows that we set back in April. Then earnings per share estimate, it hits a fresh all-time high. Okay, so earnings are starting to be revised and looking fairly healthy right now, and that's ultimately what drives stock prices. All right, here's the chart. Kind of a sleepy day overall. Didn't really do much right at the open. Haven't We didn't see much of a gyration, but we were able to maintain price above the daily pivot and unchanged level as we were chopping sideways. Then we broke a little bit higher up to R1. That was pretty much where things stalled out. And then during the last hour, a little bit concerning. We did see some late day selling coming in that pretty much gave back any of the gains that were being seen. And up a little bit, there's still this optimism with the futures in the initial overnight session. We'll see if that can last into Tuesday's session as well. And kind of seeing this not showing as much strength as we were before. The blue line is above the red line, but they're getting a little bit closer to each other. Now, some of that could be because this chart's getting a little bit longer and they just look like they're closer to each other. And a little bit of a drop off, but the bigger picture is we're still looking okay with the growth of value intraday chart for the S&P. End of day, growth was up, but up half as much as value, where it was down for the mid caps and down less for the small caps. So it wasn't a real robust day for growth. So we're coming down a little bit with our end of day chart with small cap growth of value, but we're still above the moving averages, still ticking down a notch, but above the moving average with mid cap growth of value as well as S&P growth of value, and getting really closer to a golden cross with this ratio. And still holding up okay above the majority of the rainbow with this growth of value measure as well. And a little bit of a tick up here with the discretionary to staples ratio. Tesla's been able to gain back about half of what was lost last Thursday. It was down over 14%. It's gained around 7% or so. We'll look at the Tesla chart later on. But we see staples going sideways, a little bit of an improvement here with discretionary, and that's why the ratio's been holding up for now. But we're not trending. Here's the short-term ADX, below the moving average, declining, below the blue line of 20. That's not trending. We're positive because the green line is above the red line. And we're seeing that in the intermediate term chart. Still declining with the ADX below the moving average, but positive with the green line above the red line. Still below average with volume, as we show here. That pretty much seems typical these days. Sentiment, this is a weekly chart that we look at where they're more into the positive area, and that's more or less lining up with what we're seeing with our daily charts that we look at here. And this could be a little bit of a concern here. You're seeing this red line really going up, which tends to be more bearish. It means the legal insider transactions that's really changing in that area. And when we get a real high reading from that, that can often be negative. And here's another sentiment gauge. I usually go over this in the weekend video, but this chart's been coming out later, where we're still getting a pretty pessimistic reading here, according to the Goldman Sachs sentiment indicator. But we're still below 20 with the VIX. Didn't see much of a change there. And the VIX of the VIX continues to fall. We're seeing fear just kind of creeping out of the market. Not really any momentum right now as measured by the MACD. It's pretty much flatlined currently. And we tick down with this fear gauge. We also decline with the other fear gauge. And we decline down here with the equity put call daily chart. And the 5-day chart is going down. We're dropping below this red line, which is positive. But when we get below the red line, that means that we're starting to get extreme. And we're also declining with the 10-day chart. Now, other sentiment gauges are the risk on to risk off ratio. This continues to go up, and that's positive as long as it keeps advancing. And the high beta versus low beta, when this ratio is going up, that's more positive for the market. But we're seeing the momentum starting to drift off. Now, sometimes this can deviate from what's actually happening in the market. When we were really showing good momentum with this particular ETF, whatever was in this ETF was showing good upward momentum. Now, as we're starting to possibly see a shift and seeing some of the mega caps coming back in and taking a leadership role, maybe those stocks aren't in this ETF, and that's why we're seeing this ratio coming down. and still dropping down, not really showing an awful lot of fear with volatility risk premium as well. Mastering the stock market is challenging and can take decades to achieve. Most beginner traders and investors feel overwhelmed and often fail. Stay ahead with the SPX investing program. Members gain access to the full program. Other options include immediate access to videos as they become available. Alternatively, the daily and weekly newsletters may be helpful. Click on the link below to find out what's best for you. So the advanced decline line still holding up based on price and volume. We're above zero and going up with the 10-day advanced decline oscillator. That's positive. We're above zero with the advanced decline ratio short and intermediate term measure. And seeing the 5-period moving averages of the new highs minus the new lows, that's going up, as is the 10-day. So we're seeing some internal strength that's coming into the market, which may not currently be reflected in the price of the S&P. And now this is drifting a little bit here. This is smart money indicator number 1. It's actually coming back down a little bit closer to the moving average, but it's still above the moving average, and the moving average is still going up. And we're kind of flatlining here when we look at the boom indicator. This tries to measure what's going on between accumulation distribution and the moving average itself. It's not a true representation. I can't do that with StochCharts.com charting software, but it gets us kind of close here. And we're kind of turning back a little bit more positive with the Chaikin money flow. The red line is ever so slightly starting to go up, but the Chaikin oscillator continues to decline. We had an up day on Friday. This indicator declined. We had kind of an up day on Monday. This is still declining. It's picking up some weakness or something that it doesn't like. And a little bit of an improvement with the vortex. We're still positive with the green line above the red line. And I haven't shown a lot of the advanced decline studies lately, at least more charts than what I usually show, because really not an awful lot has been happening. But we look at the cumulative advanced decline line for the S&P based on price. It's doing okay, but it's been chopping a lot sideways. And we also then break this out based on volume, where we are seeing a general improvement there. And this is encouraging, and this is longer term. This is a 10-day average of the highs and lows for the S&P. We were able to cross above the green line. When I did the weekend videos, we were right under the green line. So this is longer term positive and showing good internal strength in the S&P. And our advanced decline lines looking pretty good here across all the major indexes that we follow. This is actually looking a little bit better. This is broader market. This is the NYSE cumulative advanced decline line breaking out to a new all-time high, and not quite, well, I guess a little bit. We're barely making a new all-time high with this NYSE advanced decline line and this other, which is slightly calculated differently, other NYSE advanced decline line that we follow. So if we see the broader market looking more positive before we see it coming into the S&P, that could end up being positive. Then here's the common stock showing some improvement here based on price as well. And we're setting another new all-time high here based on volume for the NYSE. And just tick down a little bit, but we're still above 50 with those stocks above their 20-period moving average that are in the S&P 500. We're still looking okay with the 50-period moving average study, the 100-period moving average study, and the 200-period moving average study. And this is another broader market measure. We look at a 5-period moving average of the highs, lows across the Amex, NASDAQ, and NYSE. We're above zero and advancing. So this is showing some broad market strength. Then looking at the daily chart, really not much happened. We did have an up day, so it's green, but we're still not necessarily range bound now. We're trying to break out, and we're still seeing a series of higher highs and higher lows here. But if we do have some kind of a decline, we're possibly going to come right back down into this range. Of course, that's the negative side of things. We're not getting all that far away from the previous all-time high, and we continue to be below average with volume. So still above 50, but tick down with the 20-period moving average of the S&P itself, and a little bit of an improvement with the 50-period and 200-period moving average study. And this is a new addition to the list. We're just barely above this blue line here. This is the StochRSI, which is suggesting good positive momentum. The Williams percent R has been on the list for a few days now. It's also showing good positive momentum, and the CCI 14 as well as the CCI 20 and the short-term stochastics, the intermediate short-term and long short-term. They're all extreme, which is suggesting good short-term momentum. But we're still below the midpoint with the force index, even though it's positive. And the condition of the short-term trend is measured by 20 periods. We're starting to try to go back up with especially the blue line. The green line's a little more apprehensive to do that, but the overall picture is that they are going up. That's showing that the short-term trend is okay for right now. And we're still up at the high end of the +2 channel with the standard deviations chart. Now, this is interesting, though. The balance of power, we had a big up day on Friday and kind of an up day on Monday, and the balance of power is actually going down. It's in danger of crossing below the midpoint. Now, it's still positive since it's above the midpoint, but it's picking up some kind of weakness here. And we're looking okay with the bow tie, which the one I've been focusing on lately is this green fluorescent moving average here. After flattening out, it's starting to go back up, but we're not seeing that confirmed by other trend indicators that we follow. We're still positive with the go, no go with the darker blue bars. We're still up at the highest high value, the blue line here above the midpoint with this chart. We're still positive with the Landry light as well as the proper order. TTM squeeze, though, is negative, and it's been declining now for quite a while. And it's not negative yet because it's still above zero. But with the darker blue and the decline, that the context of this is that it's negative. And we're just hovering right around zero here with the ease of movement. The Arun is still looking okay. It's the oscillator's above zero, so that's positive. And we're still above zero with the S&P McClellan oscillator, so we're ever so slightly starting to go back up with the summation index based on price and volume. And we're above zero and actually showing a little bit more strength with the NYSE McClellan oscillator. So we're starting to go back up with the summation index based on price and volume for the NYSE. Swelling trading oscillator, it would turn positive after Friday. It continues to be positive. It's going up based on price and volume. And here's the momentum oscillator, PMO, just kind of hanging out here, drifting a little bit. It's above this red line. That's why it's extreme, but it's still above its moving average. But when you break this out based on price and volume, we are turning up slightly, but we're negative. We've actually been declining. And a little bit above 50 with the PMOs that are rising, going back above 50 with the buy signals, and flat to declining a little bit with the PMOs that are above zero. We are positive with the Elder's Impulse system. We're still positive with the parabolic SAR. We're no longer extreme with the slope oscillator. This is outright negative. It's became very extreme. It's been declining down. As long as it was above the green line, we were considering that to be extreme positive, even though the context was that this is negative. So this is actually turning more negative now that it's no longer extreme. And just kind of drifting down a little bit with the MACD. So here's the slope oscillator again. That's more negative. We're a little bit more positive with our other short-term oscillator, the TSI, where we're flatlining to declining with the MACD. We're going sideways with the PMO, slightly declining with the PPO. And then our longer-term oscillators, the TRIX and KST, they're flatlining to slightly declining here. Not an awful lot of momentum. Where the Choppy curve trying to turn up a little bit, but it is still negative. And we're positive, even though we tick down with the Sean trend meter. We're in the green area. And we're still above 50, leveling out here with the money flow. Tick down a little bit, but also above 50 with the ultimate oscillator. On balance, volume is positive. It's still above an advancing moving average. And we're still above 50 with the RSI 14, that's intermediate term, and the RSI 9, which is short term. And the bullish percent index continuing to go up above its moving average. That's positive. Also going back up with the NYSE bullish percent index and still extreme above this blue line, but going back up with the NASDAQ 100 bullish percent index. The condition of the intermediate term trend still is looking pretty solid here. We're above the red line and the blue line, and the times that we did see pullbacks, we just came down to the red line, and so far that's been acting as support. It's the short-term trend that seems to be waffling around and not really trending right now. But our intermediate term ADX is also not trending. We are above all of the moving averages. And we're still far away from the 20 and 50 period moving averages as measured by the boom indicator. And we're seeing a praying bottom fisher. Okay. Now, there's, as I point out every time, some of these buy signals, it doesn't generate sell signals, it just generates buy signals. Some of these signals have been very good. Some of these signals have been very bad. That's why we want to use other charts to confirm things. And still looking okay here with our longer term support levels. We're well above the pivot point on the weekly chart of the S&P. And we're positive with the Heiken Ashi. These are different charts that just measure the trend in different ways. We're positive since we're black and pointing up with the Kegi chart, the Renko chart, and the three-line break chart. Long term, we're above the midpoint with the 150 and 200 period moving averages. So that's longer term positive. And we're still negative in the long term with mid caps and small caps, but everything else is positive. And bonds are still negative across the board based on price. Now, commodities switched over to being short-term positive. Now they're intermediate-term positive, where the dollar continues to be negative across the board. So we had discretionary, which just got hammered last week and has really been underperforming. If that could kick into gear, and this is Amazon and Tesla are the two big stocks in that area, that would really help the market. And then we had tech that was up as well. Communication was down slightly, but it's been a better area that's been holding up, at least relative to the S&P. And we had oil getting above 65 now, seeing a little bit of a spike. Even though last week OPEC Plus came out and announced that they're going to increase production in July, but that ever since they made that announcement, oil's been going back up, which usually it's the opposite that happens there. And then Canada seems okay there, setting another new all-time high. We did see the BPI cross for the real estate sector above 70. That's been an area that's really struggled because of rising interest rates. The NASDAQ got above 19.3, 19.4, 19.5, ended up being above 19.6. Financial sector, we like that. The BPI cross above 80, that's showing good strength. Then we were above and then below 6,000 with the S&P. And then, well, this is kind of interesting. We had a BPI cross above 70 early in the morning, and then it crossed back below 70 later in the afternoon. Interesting. Okay. Communication had a BPI cross above 70, even though it was down. That's one of the growth areas that we want to do well if we're positive. So we had Microsoft, which really is doing good and almost getting ready to generate a golden cross. NVIDIA bounced back up a little bit. Apple, apparently there's some kind of a convention that Apple had, and everybody was all, ooh, what great things is Apple going to announce? And it was just like cosmetic updates to apps, and it really ended up being a bit of a disappointment there. Where you had Amazon and Tesla both up, that's in discretionary. And then Google was up, Meta was down slightly. Netflix, which is just coming off of setting a series of all-time highs, seeing a little more profit taking there. All right, and we're seeing a bit of a disconnect between the weighted version of the S&P, that's the bar chart, even though they're on different scales, and the equal weight version, which is the red line. Is that showing that maybe the big stocks that really drive the index, are they coming back in and taking over and helping the S&P to go up, where the weighted, equal weighted version of the S&P is languishing? That's neither positive nor negative in and of itself. It's just an observation that we want to see. Because when the market was really roaring to the upside, it was the mega caps that were really driving the indexes higher. And then this also shows that out too. We look at a ratio between the weighted and equal weighted version, where this is continuing to go up. We're still above the 200-day moving average with the Dow, so that's been holding up there. We're positive with the Elders Impulse system for the diamonds, and still not really breaking out, but looking a little better with higher highs, higher lows here with the NASDAQ. Positive with the Elders Impulse system for the NASDAQ, and looking pretty good here with the NASDAQ 100, which is, this is growth with a series of higher highs, higher lows. That's improving, even though it's still in a downtrend here. But we're positive with the Elders Impulse system for the Qs. Momentum, though, continues to drop off. Now, some of this is how the momentum oscillators are calculated. So that's why I don't use momentum oscillators all by themselves. But this continues to drop off, so we're counting that as negative. And here's the small caps. They came right up to this R1 pivot point, and that was the high. They did close off of the highs, even though they were up 0.92% overall. Finally, at least trying to break out of above this previous range here. Still below their 200-day moving average, though. And then we look at the other Russell, or the other small cap index, the Russell 2000, starting to get extreme with the RSI. We are improving and turning positive with the momentum, still below the 200-day moving average. But we're positive with the Elder's Impulse system for the small caps. Still below the 200-day moving average with the mid caps. They were up 0.25%, but they're still positive with the Elder's Impulse system. And the broad market measure, Wilshire, it was up 0.10, but still above its 200-day moving average. Also a slight improvement with the total U.S. stock ETF. Financial sector ended up being down, but its uptrend is still intact. And we look at the banks, where I pointed out over the weekend that the bank ETF is below its 200-day moving average. We broke above that and now came right back down to the 200-day moving average. And this is actually a little bit of a concern, which I also pointed out over the weekend. We look at a ratio of the financial sector to the S&P. The financials have consistently been outperforming the S&P. We're not seeing that right now. Now, this could change. It could improve, but we just want to make note of this while it's happening. And we are going down with the staples to tech ratio. That's more positive. That means staples are underperforming the tech sector. The FANG index, it was down, but it set an all-time high on a closing basis and intraday basis on Friday. But this is where we've seen the recent golden cross. And the weekly chart that I went over in the weekly video, we've seen a recent golden cross there too. And these are the really big stocks. And that they could be coming back in and taking over leadership. Where Apple, it was down below its 50-day moving average. Amazon was up above both of its moving averages. Microsoft, you can see here, starting to generate a golden cross. Ever since they came out with their earnings, they gapped up and they've just been chomping their way higher ever since then. So this is one of the better looking tech charts, at least for right now, where Google's in a downtrend, but it was up over 1.5%. Meta was down at over 0.5%, trying to stay above both moving averages to see if there's a golden cross there. Nvidia was up 0.64%, also above both moving averages. Tesla trying to regain what was lost on Thursday last week. So there was an improvement there. And Netflix seeing a little bit more profit taking, but still probably one of the strongest looking charts of all the mega caps right now. Semis to tech ratio could be breaking out here. This is what we want to see, but we need to see this continue to go up and show some overall conviction to the upside. That would be more positive. We want the tech sector to do well, but we want semis to do even better. And when that happens, this ratio goes up. And then looking pretty strong here with the short-term correlation between U.S. and world stocks, a general improvement with the longer-term correlation. Oil getting back up into the mid-60s. Dollar still in a downtrend under 100. And here is the Truflation read of inflation coming in at 1.9%, where the last report that we had from the government was at 2.3%. And we're back under 4.5% with the 10-year yield. We're underneath this red line, and that could be giving a little bit of support to stocks. And we're kind of chopping along here above the 200-day moving average with the 10-year based on price. Still looking okay with our growth to value ratios. When we look at the Qs to S&P and large cap growth to large cap value, we did turn up discretionary to the S&P, but we're still below a declining moving average. But we're above the moving averages with the large caps, mid caps, and small caps, even though the small caps tick down slightly. And this ratio going up is more positive. This means the S&P is outperforming utilities. And if that can see more follow through, that would be positive. And then the staple, now I looked at the staples to tech ratio a moment ago. This is the staples to S&P 500 ratio. It's continuing to go down as well, which is positive. It means the S&P is outperforming staples, which is defensive, like toilet paper and toothpaste. All right, so what's the outlook for Tuesday? No change to the overall outlook that we see here. We're still positive in the short, intermediate, and long term, but we're not trending. And then originally I had no economic reports coming out. Then I saw where the NFIB Small Business Optimism Index is coming out. Not a major report, but still something that we keep an eye on. And then anything geopolitical, whether it's internally happening in LA or if eruptions start in other cities, But as far as the stock market is concerned, they're mainly focused on what's coming out of the trade talks between the U.S. and China. And then we're going to get CPI on Wednesday. That's the second most important economic report of the month. Then we're going to get initial jobless claims and PPI on Thursday. And then consumer sentiment, how people are feeling about things. That will be coming out on Friday. And here's the at least initial take on what's coming out on Thursday and then on Friday. Seasonality, not really good for June 10th, where we're neutral to negative. Oh, that's interesting. 4.7. It should be 42.7. Neutral to negative with the Dow, where we're just flat out negative for the S&P and NASDAQ. And that goes back to 2002. And we do see some weak seasonality here during a post-election year. What I'm following is the green dashed line. We see a few days before we finally see a bit of positive seasonality after that, and then some negative seasonality as we head into the second half of June. And then the post-election year seasonal pattern going back to 1949, comparing it to right now. And we tend to get a little kind of lackluster, according to this, according to the Stock Traders Almanac in June. And then this is kind of fuzzy because I took a screenshot here. These are just some quick stats. How does the S&P do in June? It's up 42 times. It's down 33 times. That's a 56%. I mean, a little better than a coin toss with a minuscule return there. And then this is also kind of fuzzy, where we're up 7 out of 18 times in post-election years for the S&P in June, down 11 out of 18 times. So the return here is a negative 0.5%. Here are the pivot points set up for Tuesday's session, which are already posted on the YouTube community tab. All right, so I'm still keeping the smart money indicators on the negative side now because we're seeing a bit of a drop back here with accumulation distribution, where the Chaikin money flow is positive, but the Chaikin oscillator is actually negative. And we're getting close to a golden cross with the long-term growth to value ratio, but we're not quite there yet. Discretionary to staples, we're still above both of the moving averages, but it's still in a downtrend longer term. The Choppy curve is negative, as is the longer-term Special K daily chart, where the weekly chart is still positive. And then the momentum for the NASDAQ 100 is drifting lower as well and actually turning negative. Positive side, though, we have the bullish percent indexes for the S&P, NASDAQ, and NYSE, the McClellan oscillators and summation indexes for the S&P and NYSE. The Swindlen Trading Oscillator is positive, as is the Parabolic SAR. The oscillators, they're drifting. They're going sideways. We have a few of them that are actually negative. The Ease of Movement, Money Flow, Ultimate Oscillator are positive, as is the Vortex and Financial Sector, and we're getting that praying bottom fisher buy signal. With each video and course, members learn to implement the consensus approach, a unique analytical method. Unlike relying on a few indicators that eventually fail, this approach overcomes analysis paralysis by using the weight of the evidence to draw conclusions. Developed over decades across all market conditions, explore the SPX investing program and start with a 30-day free trial. All right, so our conclusion, we're still positive. I haven't changed this in the last number of days. We're not trending in the short or intermediate term, but we're still hanging on to being positive due to the relationship to the moving averages. Thank you. I hope you have a wonderful day on Tuesday, and I will talk to you in the next video.